Hello everybody, good morning, good afternoon, and good evening depending on where you are in this amazing world. My name is Donovan Jolly and welcome everybody once again for another amazing video of DIY investing. For today's video, we are going to be breaking down what I think are the most important charts when analyzing what is about to take place for the end of our bear market. I have a pattern to share with you guys that has repeated every single bear market since 2016, and I've actually made hundreds of thousands of dollars trading this exact pattern that I'm going to break down today. By the end of this video, my goal is that everybody that watches is going to have a much greater understanding of how to be profitable and what is about to take place over the next couple months. If you're new and just find this channel, always remember to do me a favor by leaving a like, comment, and subscribing. Make sure to hit that notification bell so you don't miss out on any of these amazing videos like the one provided for you here. Thank you guys so much for the support, and with that being said, let's jump right into it today. Alrighty guys, so here we are to start off today's video. This is the pattern I wanted to analyze for you guys. Now the way this is going to work, we're going to be breaking down this pattern. I'm going to be sharing with you guys multiple altcoins that have created this exact pattern, and then I'm going to be updating you guys with a couple that are in their very first cycle that are about to make their first breakouts. This is something that I don't see a lot of people talking about. It really confuses me as to why, because I have literally seen this exact same pattern every bear market since I first got into crypto back in 2016. And it's amazing to me that nobody's talking about it once again, because it literally repeats every single cycle. It seems like people would catch on to it, and I was kind of expecting that people would start posting charts, and then maybe the idea would become oversaturated and wouldn't work. But I literally have not seen anybody else talking about this pattern but maybe one other person. And so to say that most people are overlooking this, I think that that is an understatement. I think that honestly most people aren't watching this because they're way too emotionally involved with the most recent collapse that we saw. Everybody's worried about FTX. Everybody's worried about all this stuff. Everybody's expecting that the market is going to continue to trend lower. And I can't help but think in my head how the market structure just looks so identical to what we saw in the 2015 Bitcoin bottom. And really, not only the 2015 Bitcoin bottom, but we saw the exact same thing happen in our bear market bottom for Ethereum. Ethereum created the same pattern. The only difference was this was about a 400 to 500 day consolidation. And the one here for BTC was only about 280 days. But it's still pretty much the same universal pattern. If we come over here and look at the bottom of capitulation to pretty much our next low over here, it was about 144 days worth of consolidation. If we come back down here and look at BTC, we go from the bottom to the bottom. This one was about 216 days. So this bottom for Bitcoin has been a little bit longer, but nonetheless, I mean, if we look all the way over to here, we're sitting at about 178 days. Where Bitcoin actually started breaking out was pretty much 270. So we could still see some more consolidation. We're not out of the blue by any means. But the big thing to understand is there was a lot more length of time that it took Bitcoin to go from the top and the all-time high to this capitulation. In fact, if we draw the date tool and look at this high to the low, this one was over a year. And if we come over here and look at this chart, just to the bottom was only 220 days. And so if we come all the way to the secondary capitulation, that is sitting at 1 calendar year. So this cycle is a little bit different. There's always going to be some similarities and differences when analyzing the two. But the big thing I want you guys to remember is there's a reason why patterns repeat every cycle. Not all of them are going to do it, but the same universal patterns are always repeating because it's the same emotional investors that are trying to make money inside the market. It's the same people that are just throwing money around, have no idea what they're doing. They see the market pump, they feel like they're getting left behind, and so they go and FOMO buy. And that's the way that these cycles repeat. That's the reason why these patterns continue to repeat. And so as I'm looking at this, I literally just see the exact same thing kind of playing out again. I don't know if it's going to. It's not guaranteed. And that was kind of the thing I was thinking in my head was, you know, this pattern, I literally have seen it every bear market. I've made a bunch of money off of trading this exact pattern every bear market. And so I was starting to think, why in the heck is it going to play out again? I feel like that's kind of sketchy. Is it really going to play out again? I don't know, guys, but here's the thing. I can share with you guys so many examples of this universal pattern, and I've actually made a ton of money trading it. One of my favorite investments was actually Cardano, and I bought this one in the last cycle because of this exact same pattern. I was watching it, And it just looked exactly like that 2015 Bitcoin bottom, where we make this exact same kind of consolidation, the same type of accumulation. The only difference here was this one for Cardano took a long time, in the same way that it took a long time, for Ethereum over here. But these are the same universal patterns. This is a big double bottom formation that played out. And then what happened after was we got a complete trend reversal. Now the way that we confirm if this pattern is going to play out, once we actually break above our resistance level, notice how when Cardano rallied above, we broke out of our prior resistance, and then we came back down and flipped it as support. That was a support and resistance flip, and that's how you get confirmation of a double bottom formation. If we come over here and look at Bitcoin in the 2015 cycle, we can see that it did the exact same thing. If we draw a support line from the top of our resistance, we can see that once we broke out and flipped this level, that was the complete trend reversal. That was the complete trend reversal of our bear market. And so guys, if what we are looking at is the exact same thing that potentially could play out in the same way, there's no reason to get super over bearish right now, when what we're looking at is roughly the same time frames that we've seen with prior cycle bottoms. We've been at a year based off this downtrend. The only big difference here between this cycle and prior cycles is if we come down here, let's pull up the all-time Bitcoin chart real quick. If we come and look at prior cycles, the way that some of these have kind of worked, the very bottom of the bear market always has ended in capitulation, right? We went through this long consolidation in 2018, but then the bottom of the bear market happened after a very quick decline by the bears. This was a 50% drop inside of this move. And so this was a strong capitulation that led to the bottom of our bear market, right? If we come over here and look at the 2015 cycle bottom, this was pretty similar, right? This thing ended in a really strong capitulation, right? Let me remove the drawing tools. We're not quite into this part of the video yet. But this was the exact same emotions. The only difference here is this one from the exact cycle high to the exact cycle low was 413 days. And then we went through another 280 days worth of sideways accumulation before we started that next trend. But I mean, guys, it's almost the exact same every single cycle. The bottom of our bear market usually happens after a very quick decline. And so for this cycle to happen, as far as these kind of being our capitulations, it's a little bit different. But the thing about the Bitcoin chart is we actually made a lower low, right? This was a lower low. We technically made a lower low below the June low that we had here at about 17,500. And so with our secondary low coming in here, if we draw a date tool and we look at the exact time for that, it's exactly 365 days from the cycle top. From the exact cycle top at 69,000 to the exact lowest low of this current bear market, it's exactly 365 days. So there's no reason that anybody should be looking at what's happening inside of our market and be thinking to themselves, oh man, this is just nothing that we've ever seen before. This is brand new. I don't know what's going to happen. We're all screwed. It's not the case, guys. This is the same emotions that are playing out. And if you have the awareness to see it, and you have, most importantly, the emotional control to see it, it's not that hard to plan ahead for what's going to happen. Now we're getting into the next part of today's video, and this is going to analyze the similarities and the differences of each Bitcoin cycle. Now I've gone ahead and drawn this little diagram up here. The Bitcoin halving is this orange line, all of these thick orange lines. The bear market is the dotted line from the cycle high to the cycle low. And then this green timestamp is simply just analyzing from the bottom of the bear market to the top of the bull market, right? And we're going to go through here and also analyze the difference and the cycles in between as far as the 4-year cycle. So one of the big things that a lot of people talk about is why was this first cycle so much shorter? And the reason why I believe that is simply just because of the fact Bitcoin had a very small market cap. There wasn't hardly any money into it. And so any money that went into it, it didn't take much to cause the price to rise or fall. So I believe that that was the reason why we saw such a shortened cycle. But as Bitcoin started to grow, as the market cap began to get higher and higher, I believe Bitcoin peaked in total market cap somewhere over here around 20 billion or so. It might have been a little bit higher, but I think that that was the peak over here. So the peak in 2013 was when we finally started to get a valuation that could follow a 4-year cycle, and that's exactly what happened. Now this first cycle, from the peak high to the peak low, it was only half a year. Our typical bear markets last exactly 1 calendar year, or at least very close to that. Now the distance from the cycle low to the cycle high was 742 days, or roughly 2 years, right? And so that was our first cycle. Now if we get it over here to our most recent one in 2013, this is where we start to follow a much more consistent pattern. From the cycle high at $1,200 to the cycle low at about $180, this was almost 1 calendar year worth of a bear market, right? 413 days. This is where we start to follow your average 4-year cycle. Now when we're analyzing a 4-year cycle, remember we're analyzing from peak low to peak low. And so this one was only 1,155 days. We didn't quite see the exact same threshold as prior cycles. We were about 3 years. It was only about a 3-year cycle. It wasn't a 4-year cycle, right? So it was just a little bit shorter. But then once we start getting over here into the 2013 range and beyond, that's when we start following these cycles. We saw almost exactly 1 year of a bear market. Now, the distance from the cycle low to the cycle high was 3 years up. And this is where I'm talking about the 3 years up, 1 year down. That's where we've actually been following the cycles up to this point. And it started ever since back in 2013. We had 1 year of a bear market, and then we saw 3 years of an uptrend. And then we literally created the same thing most recently. In our 2018 bear market, we topped at 20,000. We rallied for exactly 1 year to the downside, and then we bottomed here in 2018 and the beginning of 2019. That started the 1 year down, 3 years up, and then we top, once again, almost the exact same time as our 2013 to 2017 cycle. This one was exactly 1 year down, 3 years up, and this one in our 2018 to 2022 cycle was literally the same thing. It was 1 year down, 3 years up, leading to a cycle top that occurred end of year 2021. Now guys, if we analyze what is taking place inside of our current bear market from the exact cycle top at 69,000 to the lowest point that we've made thus far at 16K, we're looking at 364 days, right on the dot of 1 calendar year. I'm telling you guys, there's a reason these patterns repeat. And that's why I keep telling everybody to freaking pay attention to this. I don't just follow 4-year cycles because they have zero tangibility and substance. I follow 4-year cycles because they literally follow 4-year cycles identically. Now the way that every cycle's worked out so far with the halvings, we have our cycle high, the end of our bear market, we begin the very beginning stages of our new uptrend. We get very close to those prior all-time highs, but just barely below. Our halving takes place, and then we get this massive price appreciation into new all-time highs. Same thing has happened in 2016 as well. We went through the bear market, we went through some accumulation, got our first higher highs, got very close to the all-time highs, but not quite there. The halving flashes, and then we get our big move into price discovery. If we look at our most recent cycle, the same thing happened. We get our bear market, the bear market ends, we get our first higher highs, we get close to those prior all-time highs, but just under. The halving flashes, and then we get our move into new all-time highs. So if we follow our typical 4-year cycle, what we're going to be expecting to see over the course of 2023 is a lot of this sideways action. We kind of went through a lot of sideways over the last 6 months, and so we might end up seeing a pretty quick breakout to the beginning of our new bull trend, and it might act a little bit more like our most recent bear market breakout of 2018 and 2019. And so I'm not going to try and predict that by any means, but there's literally only one of two things that are going to happen. We're either going to, maybe break out a little bit and then kind of go sideways and then start our uptrends like that, taking us relatively close to the all-time highs, leading up to our halving, like all of our prior cycles have, or we're going to do the opposite of prior cycles and we're going to front run the halving, right? Let's assume that we start breaking out and we're literally sitting into new all-time highs, over 100K per Bitcoin as we're approaching this Bitcoin halving. At that point, that will be the first time ever that Bitcoin is sitting at a new all-time high before a halving. And I think that that is something that we really, really need to pay attention for. If the 4-year cycles have played out this identically up to this point, it's very important that we do our part by basically analyzing them, by sticking to them and making sure that we're at least having a focus on them heading into our next cycle. Thus far, our bear market has been no different than prior bear markets. And so if that's going to play out in the same ways that it has in prior 4-year cycles, then like I've stated, there's only one of two things that can happen. We're either going to follow kind of the same rule of thumb where we begin our uptrend, we're still consolidating below prior all-time highs heading into that halving, and then we get that massive move, or 2023 is going to end up being a much more bullish year. We actually start breaking out and leading into new all-time highs for the first time ever before a Bitcoin halving. And if that's the case, I'm honestly going to be looking at this next Bitcoin halving as a sell the news type of event. I can't ever predict that. We have no idea until we get there, but I'm sticking to my time frames because they've never let me down up to this point. And with these time frames, like I've stated, we just need to follow along. Either they're going to do the things that they've done in prior cycles, or if they start to distance themselves, we get a deviation from that trend, then how do we plan ahead for that trend? Well, if we deviate from that trend and we start rallying up into a new all-time high before the halving, I'm probably going to do my part by taking profits when it comes time to that halving, because it will be very different than prior cycles, right? And so if we end up doing roughly the same, where we start our first beginning impulses, maybe we do something like this, our 2015 cycle, I don't know exactly, but if we end up doing something along the lines of this and we're still sitting below our prior all-time highs, then I'm honestly just going to be looking at this halving as pretty much the same as prior halvings. I'm going to be looking at this as a bullish catalyst. So that's really the way I'm looking at it. If the prices are below prior all-time highs heading into our next halving, I think it's going to be a bullish catalyst. And if we're sitting at new all-time highs, some crazy move like this, and our halving starts flashing, I'm probably going to be selling. So I wanted to give you guys this update just as a way to kind of simplify some thoughts. I see a lot of people that are still kind of confused on what's taking place, and I figured the best way to mitigate some of that emotion and confusion is by simply just analyzing things from a very bare bones basic form of analysis. Timeframes are truly the most accurate form of analysis inside of crypto that I've ever been able to find. And so for that, I really felt like it was important that I talked about it. And so guys, if you found value in this video, make sure you guys do me a favor by leaving a like, comment, and subscribe. Make sure you guys join the Discord server. There's a free invite link. Or for the people who like to join my signals, follow all my trades that I take, new picks that I'm picking inside the bear market, what altcoins and all that stuff. Links are in the description for the people that like to sign up. Links are in the description for the people who'd like to sign up on my website. Thank you guys so much for the support. Sorry I haven't been updating as much. My grandma's in the hospital. Same grandma that I lived with when I was very beginning my YouTube channel. And so she literally almost died. It was very close. It was pretty hairy there for a second, but she's doing good. She's getting discharged from the hospital this week, and so that's why I've been kind of absent, why I haven't been able to be as consistent as I've liked. But now that she's doing okay, expect frequent uploads. I'm just going to keep to my normal schedule of uploading Monday through Friday. So once again, guys, thank you so much for the support. And with that being said, I will catch you in the next one. As always, peace out.